Hey everybody, this is Ryan Mallard and we're going to talk about the cruise line stocks today. Should you be investing in them for the long term? These things have been hit so hard. You have Royal Caribbean, RCL, down 75% off of its highs. You have Norwegian Cruise Line, NCLH, down 80% off of its highs almost. And then you have Carnival Cruise Line, CCL, that is down about 75% off of its highs. Should you be getting into these things? Everybody's like, man, they've never been this low in ages. I'm going to get in. This is a big time, long-term play for me. But what they're not considering is the frustrations and the risk that can come with some of these kinds of stocks. There's a lot of risk to it. Before I get into CCL, NCLH, and RCL, I just want to say I don't have any positions in these stocks. I'm not long, I'm not short, and I'm not planning on doing either anytime soon. I have zero bias when it comes to these things. I'm looking at the charts. I'm trying to help you because I'm getting a lot of questions about the cruise line stocks, just like with the airline stocks and just like with oil and gold and a whole host of other industries that have been hit really hard or doing really well because of the pandemic. Now, the big question is you have to ask yourself, what kind of time frame am I looking at here? Do I want to get into the stock and have this money tied up for years and years and years? Or are you trying to make a quick buck? Trying to make a quick buck, I'd probably move on from these things. There's no telling when these things are going to actually rebound back to their former glory, if ever. You look at the automakers, they've never really returned back to what they used to be before the 2008 recession happened. And now you got game changers like Tesla that are coming in and they're taking away market share from them. Now, NCLH, RCL, CCL, they've either rebounded almost 100% off of its lows or pretty close to it. So the S&P 500 is about 36% off of its lows. So the cruise lines have actually outperformed the market as a whole. However, the risk and the volatility were extreme. The S&P 500 did not fall like the cruise line stocks did. So yes, the rebound is going to be far greater than what you would see in the broader indices. But ask yourself this, with the market having rebounded as much as it has, with the NASDAQ almost at all-time highs again, the NASDAQ 100 QQQ is only like 2.5% off of its all-time highs. That's crazy, right? So you have to ask yourself, if this is a dead cat bounce, how much higher does the market have to go before we start seeing a retracement? And if that retracement hits, are you going to start seeing RCL, NCLH, and CCL start pulling back to their recent lows? Because if they do, then all of a sudden you're looking at 40, 50% declines in the cruise line stocks. But okay, let's say you did it for the long term. Fine. Can you still handle a 50% drawdown? Can you handle even a 25% drawdown? Because there's a good chance that you could see a 25% drawdown in the cruise line stocks going forward. There's a lot of volatility. But let's go ahead and jump right into the charts here and we'll talk about the risk reward a little bit more and what kind of bullish or bearish patterns are setting up in these stocks. First up, Royal Caribbean, RCL, you have an ascending triangle pattern forming. It's performing pretty well. Technically, it's holding support underneath, it's fighting resistance above, so you're seeing a rejection above and support below, and until it breaks either to the upside or to the downside, you're not going to know its true direction going forward. So here's what I do on this trade. If I'm looking to get in, which I'm not, I want to get in probably around this 48.50 area. Now that's about 20% higher, but you got to remember too, this thing was trading at over $130 a share. And I'll go back to November 21st of last year. I actually got into RCL in the trading block at around 116.71. I wrote it up high, I went it all the way up to 131. I sold about half of it there on January 6th, and then I sold the other half on the 21st of that month at about 130. So I made on the first half about 12%, on the second one I made about 11%. Both good trades. But now I'm not going to touch this stock, okay? However, 48.57, it would be about a 20% move from where it's currently trading at. That would be a breakout point. Now, I know what you're saying. Ryan, you're leaving all this money on the table. If it goes up to 48, well, you could have had it at 40 where it's trading at right now. Very true. However, you're in a zone where there's not a defined direction right now. It's just bouncing off of resistance above and bouncing off of support below. And it's just stuck in the middle there somewhere. So until it can break below support, in that case, that would be a short setup. Or above, that would be a long setup. You don't really have a true direction here. Now, defining risk is a little bit more difficult. If today's the lows and it goes up to 48 and breaks out, then you would probably want to put a stop loss below all these moving averages. I do like how there's a 5, 10, and a 20 moving average kind of converged underneath the price right now, and it's trying to hold it up. But then you could also say, well, I expect this thing to go from 48 to, I don't know, maybe you think it's going to go to 100, right? I don't think so. I think it's going to be a long time before it starts seeing those kinds of prices if ever again. But if you're in that camp, then maybe you have to put a stop loss around the 33 level and you put your stop loss below the support level that's rising up. Carnival Cruise Line has a textbook triangle pattern here. So what do I know about triangle? Well, they tend to be, when they're this symmetrical and perfect, they tend to be a little bit of a wild card. They're either going to break higher or break lower, but you don't want to get in between because you don't have a clear direction on this trade. Now, when it's in an existing downtrend, more times than not, it's going to break lower. So if it breaks lower, is that good for RCL? Probably not. So you have a lot of conflicting signals here in the cruise lines industry. But if it does break out to the upside, okay, it's above its 50-day moving average. It's got the 5, the 10, and the 20 right underneath it as well. There's some support there. And so you probably don't want to break out until it gets to about 1566 or so. And then my stop loss, again, it's going to be a huge stop loss. It has to be very wide in these things because there's so much volatility. It's probably going to be below 1130. Again, I don't like this kind of risk reward parameter, okay? But I know there's a lot of people out there that they want to get into it. I'm telling you right now, I don't like the trade setups. I think there's better trade setups out there than going after CCL or RCL or NCLH. Now, a lot of people have been drawn to NCLH as well, Norwegian Cruise Lines, because it's been hit harder than the rest. That's not a valid reason to get into a stock because it's been hit the worst. Bear Stearns and Lehman Brothers, they were hit pretty hard too, right? Would you want to get into those? No. Because sometimes the worst can get even more worse. Stock that's trading at $12, even though it was trading at over 50 before, it can still go from 12 to 6 or from 6 to 4. And that's not good. You're going to lose a lot of money if it does that again. And you can see it had a triangle before. And I don't think this bodes well for the other two stocks either. You have this triangle pattern. It broke above it. Yes, it's trading back above it now, but it's showing that there is some weakness at that support level that if it breaks, again, it could drag CCL and it could drag RCLH with it. Another thing I want to point out here is if you look at NCLH, look at this huge volume level that you've seen in recent weeks, far more than what you saw in the huge sell-off. You look at RCL, you have the same thing, a lot of volume in recent weeks. You take a look at CCL, still a lot of volume that has flowed in over the last few weeks following an establishment of the most recent lows. You saw a lot of volume pour in there. Now I get where some of this volume has come from. You got a lot of people who are entering the stock market for the first time. I got neighbors that are buying into the cruise lines, the airlines and stuff like that. They want to get these things dirt cheap because they remember how Ford back in 2008 went from $1 up to $14. And they don't want to miss out on that. But that doesn't mean that the cruise liners are going to do the same thing. And so you have these patterns there. They haven't broken out of the patterns yet. NCLH has shown a little bit of weakness where it has broken at one point below key support, and then it popped back into the support level again. So there is some potential for further downside on these cruise liners. The other issue is the headline risk. Are these companies going to start getting sued? I've been reading articles in different publications saying that these cruise liners are at high risk for major lawsuits because they were still going out to sea during the pandemic. So can they survive the flood of lawsuits that are going to be coming into it? I don't know that either. However, it's a huge headline risk. That's what I'm trying to tell you here. My favorite out of all of them is probably Carnival Cruise Line, and I think they have more headline risk than any of them. I just like the technicals of it better. I think the technicals are shaping up better than what you see on RCL or NCLH. So again, I have no intention of playing these stocks. But if I were to play it, this is what I would do. I would go ahead and decide how much of my capital in my portfolio do I want exposed? How much of that am I comfortable with being exposed to the cruise lines if they just completely go bottom up? How much can I lose and still be okay? For me, that would be the amount that I would be willing to play. The other thing is I'm going to decide where am I going to get in at. CCL, for instance, if it goes above the 1566 level, that might be where I'd stage my first position. If it can continue to break out and let's say it breaks these highs right here from April 29th, maybe then I start putting in a new position at around 1685. So I'm building my position up incrementally. But I also have to have a stop loss too, because always assume that you're going to be wrong on your investments. Always assume that you're going to be wrong on your trades and then plan your risk accordingly. So if I'm going to be wrong, I'm going to have a stop loss in place. And we already talked about possible stop losses, so I won't get into that again. But you've got to know where you will get out if you're wrong. My best advice in trading that's served me well over the years is always assume that you're wrong. When you're wrong, it's your fault. And when you're right, you were just plain lucky. That's what I do. I always assume I was just lucky when I was right. When I'm wrong, that was my fault. I got out of it accordingly. So instead of getting all in at once, consider just building a position over time. If you continue to be right, okay, you can add a little bit more, but know where that's going to be capped off at. You don't want to have your whole portfolio in cruise line stocks, airline stocks, Boeing. You don't want all those stocks just to be all over your portfolio because your portfolio is going to have huge amounts of risk. You got to know what you're dealing with here. This is kind of a lotto play. I don't like those kinds of plays. I think there's huge amounts of risk. I don't want to touch that kind of stuff. But I know there's a lot of people out there that are going to do that. And as a result, I'm going to try to give you the best approach that I can possibly figure out with these things. But in the end, it's your job to plan your trade out and to trade your plan. If it doesn't work out, you get out. That's it. You move on. You live to trade another day. You live to make the next trade. If you like this video, I'd encourage you to like and subscribe. I try to do about 2 of these every week. It helps me to continue to put new content out as long as I know that you guys are watching it. Continue to press on in this market. It's some of the craziest conditions you'll ever see in your lifetime. But that's what I'm here for. I'm trying to give you some perspective on the daily goings of the stock market and what I've learned over the years. Thank you and God bless.